So just sitting tight right now. I don't see anything there at the top of the hour that's giving us anything to work with. Yeah, RPTX is an acquisition. It's possible I'll need to update that. That is possible because I just retaught the classes. Okay, so just saying type. Well, we use our own data vendor. My understanding is so when you sort of incorporate the TradingView charting engine in your own project, you can connect it to market data, but I don't think they actually sell market data in that way. Yeah, you have to get your. I'm almost positive you have to get your own data vendor, and I could be wrong, but I'm pretty I'm pretty sure about that. So, anyways, that's how we've been doing it from the beginning. But also, it kind of makes sense because we were subscribing to our own data vendor for charts, or sorry, for scanners already. So we were already doing it for scanning. So that just we use the same vendor. I don't see any clear catalyst for TNMG. So Chinese stock, recent reverse split. At this point, I would say with no clear catalyst, it's kind of a, potential wild card, but it just depends on what it's able to do. High a day is 43. I got a starter there, looking for the break through 350. There's 48, there's 55, holding 3,000 shares. So it seemed like it came into a little bit of selling, so I'm already taking some profit off the table. Just a quick scalp there for $1,000, holding 750 shares left. So basically the trade that I took there was a little micro pullback. And I thought, well, if this breaks through 350, half dollar, but it only went to 355 and then it stalled out. And there was already some selling around 344. So just a small trade. No, it's not a headline that typically works, but I gave it a shot anyways just to see. I just use the standard MACD. I don't make any additional changes to it. So it's just the standard MACD. I prefer it on the 1 minute to the 5 minute. I haven't pulled up Ortex, I don't think at all this week. We're not really in the cycle where we're seeing the short squeezes, so it I'll use it when we're seeing that, but we're not really seeing that right now. So, yeah. So I got in on that little micro pullback. The micro pullback was right around 335, 340. But yeah, it was brief. Well, so I'll show you the recording during the recap of that trade, or after the recap when we do a little QA session. Well, that surprises me a little bit, but I'm not planning on getting back in. I mean, technically, that was the first 5 minute candle to make a new high, but the MACD was negative on the 1 minute. I don't recall any big Christmas Eve trading days. I mean, it would have been perfectly fine for me not to show up today. I wouldn't have felt that I missed anything. But I it's fine. Just I said I would be here, and so I'm here and got one trade, so that's all right. I'm just sitting tight, really. We'll see if we get better action after the holidays. Um, well, so the wash sales thing, that's there could look, there could be some people that have been holding positions for a long time on low quality stocks, and next week they say, you know what, I'm just going to cut this loss, take the loss. It's going to offset gains maybe they have during the year and just take the loss. So, yeah, that might happen, but those are generally going to be on stocks that are already down a lot and probably have very light volume. So you might see a little continued sort of selling on some of those very weak names, but that's not going to really change things for us because we wouldn't be trading them anyways. Um, so I don't think that's going to be an issue. I don't even know how much of an issue it really is, um, but I think it's fair to expect there could be some of that selling, but I just don't think it's going to be a problem. So this year things slow down a bit going into the holidays, which I wasn't expecting, but you never know. And so it's there's just that market cycle between hot and cold. Yeah, so this is one that's moving up a little bit. Your high there is 314. Traded it before. It's not one that I feel like I've done really well on in my recollection. It's already showing a couple topping tail candles. So yeah, the high there was 314. $10,000 share seller there on the ask at 301. So it's up 40% on the day, second leading gainer. Just selling off here. Yeah, I'm just saying tight. We'll see if there's anything at 8:30. I don't really expect it, but just saying tight, and then we'll do my recap. Starting, I might do it record it a little earlier today. We'll see how things look here in the next hour or so. No trading it at Schwab. Yeah. It just doesn't feel like it's really worth being aggressive on anything today. Yep, I'll be here on Friday. Okay. So I'm going to start with a recap, and then I'm going to switch gears and I'm going to teach a special class for you guys today, which I think you'll enjoy. I think the RADX one is added. I think it's going to be in the parabolic momentum section of the new classes when I teach them. What's up, everyone? All right, happy. Well, let me do a take two on that. I don't want to. You, God forbid, you say the wrong thing. Okay. What's up, everyone? All right, so here we are. It's Wednesday. The markets are closed tomorrow, and then we'll be back at it on Friday. Fortunately, today is a green day. I would have been perfectly okay with it being a no trade day, but I did find something that I liked enough to pull the trigger, and I jumped in it. Now, for those of you guys, by the way, who have not already checked out our New Year's sales here at Warrior Trading, they are going on. They have just started. So I'll put a link in the description, and I'll pin one to the top of the comments where you can see the discounts on our Warrior Starter and Warrior Pro memberships. Okay, so with that, let's go ahead and jump on the screen share, and I will start breaking down my trades from the morning. Well, I say trades when it was really just trade. My one trade of the morning was on TNMG. We had a few different stocks that popped up on the scanners. Nothing was really exciting. The Webull small account is still sitting, just sort of, basically, this has been tricky. It's just sitting tight. I just haven't taken any trades here in a little bit. And this is the wrong account. I'm kind of bummed out about it. I would have liked to have been a bit more active, but just as it turns out, the last couple trades were very small winners. And I felt on those days that I kind of blew the opportunity for a bigger trade by jumping in something that wasn't really that great. So then I've been waiting for something really good so I don't use up my cash. This all ties into the challenge of trading in a cash account. That mental battle of you don't want to use up your buying power, and then have a great opportunity. You don't have the buying power to trade it. On the other hand, you want to use your buying power each day so you're maximizing growth. I've been on the wrong side of that. Anyways, we'll get into that at some point. But for right now, TNMG is the stock that I traded. Now, when I first sat down this morning, we had MWG, which was up 120%. But as you could see, it's a cheaper stock. So for me, not something that I would typically go for, and that was no exception today. So did not trade this one. Then we had INDP. INDP popped up sort of after hours, popped up, pulled back, squeezed a little bit higher here. I think this actually in 24-hour markets went a little bit higher at 1 in the morning. But in any case, for traders that use Robinhood or traded on some of those markets. But nonetheless, it ended up coming back down. So this was a no-go coming into the 7 a.m. kind of window when I begin trading. So starting at about 7 a.m., I'm watching the scanners. I'm looking for the next opportunity. I saw FJet hit the scans. I was like, nope, not going to go for that. That's too risky. RPTX floats a little too high. It ends up being an acquisition. Then we had TNMG that hit the scanner. Hits the scanner, it pops up, and basically the way I approached this thing was I saw it squeezing up, and this was our chart here. Was this it? Or was it here? No, yeah, it was here. So it squeezes up here to this high. It dips down, and I bought a little dip down here. Now, when it came back up to 340, 345, there were a lot of sellers. It ended up going up to 350, 355. I took my profit, and then it dropped back down. Warrior Pro members, I'm going to show you the live trading archive of this, which I think you guys will enjoy. So I'll give that to you guys during our QA session as soon as I finish the recap. But in any case, it was a very quick trade. And so, but $800 is not bad. It was 12,000 shares, so didn't even get quite 10 cents a share. Again, this is an example where another trader, potentially focusing on home runs, might have lost on this, but because I was willing to take the small base hit, for me it was a small winner. Now the next stock that I considered was DRMA. Now DRMA, this one was interesting. It squeezed up pretty quickly. Private placement news. However, it's a stock that I know I've struggled with in the past, and so because I had that, kind of mental history and recollection, I was immediately like, no, I don't think I can trust that one. So that was a no go. SOBR, that one was also a no go. It's, as it turns out, has been a pretty nice move since the open. But in any case, pre-market earlier, I really wasn't sure that it was going to work. So that's where we sit here this morning. It just is the nature of trading through the holidays, and right now, I think we're in a position where the market has been a little colder as it is. So because the market's been a bit colder, traders during this holiday have not been feeling a high degree of FOMO. When there's a lot of FOMO in the market, the fear of missing out, people are, there's much more exuberance. These stocks are performing a lot better. But what's ultimately happening here is, people are not feeling that level of exuberance. They're just kind of like waiting, I think, for something, for the next theme. So that's what I hope for January, is that we get another theme in the market that's obvious, where we've got a catalyst that works, is predictable. That's where I'm going to do really well. So anyways, that's where I'm at here for today. So finishing it up in the green, and I'm going to teach for our Warrior Pro members here today. I'm going to do a QA session. We're going to go over the live trading archive, and then I've got a special class that I'm going to teach to you guys. So there's still more education for members, and for those of you guys tuning in on YouTube, I hope you check out the New Year's sales if you haven't already. So make sure you check those out, and I will see you guys streaming bright and early on Friday morning. Okay, see you on Friday. And let me just... And a reminder, as always, please manage your risk, take it slow, because, in case you didn't know, trading is risky and my results aren't typical. There's no guarantee you'll find success, whether you trade with me or you learn on your own, so I always encourage you to practice in a simulator before putting real money on the line. Okay. I don't know. I think it was halted pending news. But I'm not really sure. Let's see. So I want to. Where's that? Okay. So let's see. So before I do the Q&A session, let's see. What do I want to do first? Oh, so basically, so OMER, for instance. Okay, so we can see right now on the level 2, if we pull up the level 2, that it's halted. So what I would look up is I would check NASDAQ halts, and then you can look at the current trading halts, and you search OMER, the ticker, and it's halted on T1, and it shows it's going to resume at 950. So it was halted pending news. And this was the headline they put out. It's a 61 million share float stock, so I'm not really thinking that there's going to be any opportunity there, but yeah. Yeah, I think trading faster it has is better. So I've been working with this software. Oh, that's different. So let me just fix this archive. So I've been working using let's see, the eye tracking. Now it's not perfect. I have to say it's a bit of work in progress, but it is coming together a little bit. So I'll show you. Let's see, the trade here on TNMG. Okay, so I typed in the TNMG chart before I typed in the level 2. And I was just sort of looking at the chart and trying to think about, whether or not this was something that I wanted to trade, da, da, da. So then I pull in the level 2, I type in the level 2, enter, and then I close these just to make it easier to see the window. This is just a new layout that I'm working on. Joseph commented on it today, just so I can kind of record this better for the screen recorder. So now you can see my eye. The red dot is what my eye is looking at. Again, it's not perfect. I think it's showing here. There's nothing here that I'm actually looking at. So I think I'm supposed to be, I think what I'm actually doing is looking about here or here. So it's a little off, but it's pretty close. So I put in the price. So then I added 12,000 shares right there. And when I added, it was kind of like, this was where my eye was. Yes, I can do calibration. I have to get it slightly, so just not to get technical, but my 4K monitor is scaled to 150% to make it easier to read. This does not allow you to use a scaled monitor, so the tracker. So you have to unscale it, and I can't use 4K with an unscaled because you can't see anything. So I'm using a smaller 1080 monitor right now, and with no scaling, but I ordered a slightly bigger one, so I think that'll work better. So once I get the new monitor set up, I'll try to get it calibrated. I'll recalibrate it, but in any case. So here, the workflow basically was I pulled up the stock. I had already done some basic due diligence on my other monitor of checking. Well, I looked at the daily chart. I checked the float. I saw it was moving up. It's up 20%. I initially was going for 5,000 shares, and then I was like, that's a little too heavy. Volume's a little lighter. I'm going to do 3,000 shares. So I adjusted for 3,000 shares. I punch it there in with 4 orders between 35 and 40. So I'm in at 38. And when it comes up here, immediately I'm like, oh, there's a little bit of a seller there. And there's a little bit of a seller there. So I take a little profit off the table, half, and another half. And now I'm kind of like, and another half. And now it's like, oh, this isn't great. It's not even holding above the $0.50. So it ended up being a very quick trade. Well, I'm kind of committed to this one that I got. It was like $7,000 or $8,000, kind of expensive. So I'm gonna try to make the most of it. But it's Tobii Pro Lab. So anyway, so that was the trade. So I'm hoping, I just set this up, so I would love to be able to get some more trades and have a day that's really active, but in any case, that's all right. It'll take a little time to calibrate this and get it dialed in a little bit better. So in any case, what you see here is kind of me looking around at different things as I'm getting ready to take the trade. And I think those two flips here and then here, I was checking 20% on the day and the volume, and that's what prompted me to go with smaller share size. I was like, yeah, I should probably go with slightly smaller share size. So then I jump in right there. I glance at the position, I see the size, and then I'm back to here. Still, I is still 100% here. I'm not, at this point, I'm not looking at the chart. Right? I glance at the position again. I glance at the chart really quickly, and I'm still at the ask. Check the spread, check the position. But you see what I kind of have said before about this is like me looking out the windshield front of the car, and this is me glancing at my mirror, kind of glancing at other things, but this is where my eye is really fixed. It does say it calibrates for the glasses, or it adjusts for that. So anyway, so that was that trade there. And then yeah, that was the only one. Number 7, what was here? Yeah, I think I was just looking at this, considering it. But wasn't really sure about it. We ended up having some bigger sellers that came out on this one. So it sort of dips back down, then it comes back up. Seller there on the ask. Another seller. So, all right. So hopefully we'll have more of these in the future. Well, I'm sure we will. Just will be more interesting when we've got a stock that's moving a little bit more. And I'm still figuring out how to capture my layout. So I just look at the ask price. What I end up doing is I just end up spending my time focusing on the ask. Looking at the bid, yes, it tells me what I could sell for right now. I mean, that's true, but I don't know. I just looking at like how much this is going to keep going higher, I end up looking at the ask price. Okay, so now what I'm going to do is I'm going to switch gears and I'm going to teach a class. Oops, and just short recap. Oh my gosh. As always, please. All right, hang on one second. I just gotta give June a bowl of refill of water. I hear her asking for that. Thank you. And it was one of you guys who suggested the eye trackers. It's not to take away the credit from the suggestion because it was a good suggestion. People have said it in the past, and I'd looked into it in the past, and I was like, oh, this is, I was like, I don't know how well this is going to work, da 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 da. But then this one I thought actually looked like it was pretty good. So, all right, so let's just check my whiteboard here. Okay, that's good. Okay, that's good. Good. Yeah, I suppose that does make sense that the glasses might work better. Maybe I'll look into that, but I do already wear glasses, so I don't know. That might be a bit of a pain. Jerry, I will look at that from time to time, but not necessarily. Um, not I mean, I feel like I do consume that data of how big the jump leaps are between the different levels away from the market, but it's not what I'm focusing on the majority of the time. It's just something I glance at early on, and then at that point, I kind of know it. Okay. Okay, so I'm going to answer this question in video form. That was, let's see, presented here recently. I'll turn off the camera and back on. The question was, I want to improve my trading next year. What should I do? What should be my focus? But I'm going to try to record it in a way that is useful, not just for it being the new year, but just in more general terms of I want to improve my trading. Yeah, that's right. I get a general idea, and then I kind of don't worry about it too much after that. Sometimes we'll have a very thinly traded stock where the jumps between the levels is really significant. But for most stocks, it's not. It's not as much. Okay. This will be for YouTube. Okay. What's up, everyone? All right, so in today's episode, I'm going to teach a class based on a question that was recently asked of me. I had a student who came to me and said, Ross, I want to improve my trading over the next 4 weeks. What are the top things that you think I should focus on?
And I thought about that a little bit. It just happens to be that we're getting ready for the new month. And so it was sort of like, all right, I'm coming to the end of the month and now I'm getting ready to reset. So what can I commit myself to focus on over the next month? But I think that traders have this feeling at a lot of different times throughout the year that, you have a loss or you feel frustrated, you're not happy with your performance. And it's like, okay, what can I do here over the next few weeks? What are the top 3 things that I could focus on that could actually move the needle in improving my trading? And I'm going to share with you, honestly, what I really think is going to make the biggest difference. Not all of you guys are going to like what I'm going to share, but it's what you need to hear, all right? Might not be what you want to hear, but it's what you need to hear. So let's go ahead and jump onto the screen share. I want to improve my trading. This is how it's done. For those of you guys tuning in for the first time, I'll introduce myself briefly. My name is Ross Cameron. I am a full-time trader. I funded my first account in 2001, and the strategy that I trade is all about momentum trading. So everything I share with you is really based on the insights that I've learned over all of my years of trading and all my years at Warrior Trading, teaching beginner traders the strategy that I still trade even to this day. So the first thing that I would ask you, if you came to me with the same question of, I need to improve my trading and I want to do it over the next few weeks, I would say, well, let's set the stage. I need some context here. What are we working with? How bad is the situation? Just like a medic getting out there in the field and assessing your patient, I have to assess the situation. So what I want to know is, what is your current level of accuracy? What is your current profit loss ratio? And what are your total gains or losses? This is your baseline. How much are you making or losing? What are your strengths? And what are your weaknesses? And have you proven that you can produce profits? Even if you're not consistently producing profits on, every single week or every single month, have you had periods where you have made some money? This is helpful. This is a good starting point. If you haven't, then that's also really helpful information for me. So the first thing that I'll say is that if you're in a place right now where you do not have good accuracy, you do not have a good profit to loss ratio, and where you are currently sitting with total losses, not total gains, that speaks to me for the need to further develop the strategy that you're going to be trading. Now, what I do for myself is I import all of my metrics to this software right here. I have no affiliate relationship with them, so if you want to use someone else, use someone else. But the nice thing here is you can go and you can import your trades from, dozens and dozens of different platforms. And when you do that, you can go to the reports view here, and you can now see all the details behind your trading history. And this is really important because you can now data mine all of these trades to understand patterns in your performance. This could shed light on something you could lean into that's a strength that you may have overlooked, or potentially a weakness that you haven't really recognized is so prominent in your trading. So for me, for instance, when I have all these trades imported, you can see my accuracy over the last 10 years is about 68.5%. My average winners are $1,500. My average losers are $1,400. And I've got $21 million in trading profits. That's pretty crazy. Now, the thing that some of you might be surprised at is that if we looked at my average winners actually are not that big. In fact, right now, they're only about 15 cents per share. Now, if you haven't already watched one of my full-length classes on how to start day trading, where I walk you through the ins and outs of my strategy, I'll put a link to that at the end of today's episode, because that's what I would use as your starting point if you're looking for a strategy to begin implementing today. My focus is a small account growth strategy where I'm trading momentum stocks, typically that have breaking news between 7 a.m. and 10 a.m. Eastern Standard Time. I risk 10% in order to make 10%, one-to-one profit to loss ratio, target accuracy, 75%. Even if I come in a little shy of that, that's okay. And target growth for a small account challenge for me is to grow my account by 25% per week. I focus on only trading stocks that meet all 5 pillars of stock selection right here, meaning they are really an A quality setup. And these 5 pillars essentially search for stocks that have a high likelihood of experiencing an imbalance between supply and demand. And then once I found that type of stock, I trade this specific pattern. That's one of my favorite patterns to trade. So if you're at a place right now where your accuracy is struggling, your profit loss ratio is struggling, and you have total losses, that to me speaks to the need to become a master of one strategy. Just focus on mastering one. This becomes your bread and butter while developing more advanced strategies and setups later on. My strategy for high accuracy is focusing on 15 to 20 cent base hit winners on momentum stocks. These base hits give me about 72% accuracy versus a home run trader who's going to end up having far lower accuracy. So I share this with you at the beginning of this class because I think for some of you watching, you may be thinking, I want to improve my trading. In other words, I want to start making money or I want to stop losing money. And that's the problem with that is there's a huge gap between I'm losing money and I want to be making money. I mean, it's like, okay, this is wonderful. It's great to have this goal, but having that goal alone and saying, I want to make money next month, that doesn't clearly outline the very specific steps that you need to take in order to move in that direction. So if we start breaking these down step by step, the first step is adopting a strategy, right? So you need a strategy, number one. And number two, you have to prove that you can be consistent trading that strategy. So some of you may have already adopted a strategy. You may be kind of, testing out my strategy or another strategy, whatever the case may be, but you haven't yet proved consistency with it. But that's okay. So I'm also going to share with you in today's episode the steps that I would take to work on this consistency. But if you haven't already adopted a strategy, then that's your first step. All right. So depending on where you're at, just be aware that it's critical to become a master of one strategy in the market. And that was, for me, my turning point. Someone asked me, Ross, what were you trading just before your turning point? And I said, well, just before my turning point, I had this sort of long extended learning curve where I initially, from day one, ended up making a little bit of money, and then I ended up giving it back. This was actually year one. From day one, I was doing well, and then year two, I was losing, and going into year three, I continued to lose until I kind of hit this rock bottom period, and I started to turn things around. And when I started to turn things around, it wasn't like things all of a sudden, just started going straight up. What ended up happening is I started to make a little bit of progress, and then I give it back. And then I make a little bit of progress, and I give it back. A little bit of progress, and I give it back. So I had this long period of being more or less break even. And in this period right here, what was I doing that was working? I was focusing on trading news. I was focusing on breaking news catalysts. However, I was focusing on price range of any price range, float or market cap, any. So I was trading high price stocks. I was trading low price stocks. I was trading the S&P 500. Anything that essentially had news, I was trading. So I was in the right direction with looking for news catalysts because news catalysts create volatility. But what I needed to analyze in my metrics was what was happening on these days right here, right? Because if I could take out all of those days, then my account instead would have just been building, right? And so what I discovered was that most of these losses were coming from trading higher priced stocks. And most of them were also large cap stocks. And so that's what got me focused on adding this new criteria of price between 2 and 20. Now, by implementing the price between 2 and 20, I did naturally end up trading less. There were fewer trades. But these were the trades that I was already showing that I was trading better and had higher accuracy on. And so when I cut out the other stuff, my accuracy improved in total. Now, one of the things that I would say for all beginner traders is lower your expectations. I want you to think about. Hang on one second. I just got to pop that back up. There it is.
Wrong screen. Okay, I'm gonna cut back in here. So I'm just gonna do a quick little, and just in case I don't know exactly where that got cut, so I'm just gonna fix that. Um, Now, one thing that I would say to beginner traders is to lower your expectations. So I want you to think about two different traders. One trader is up $100,000 on the year and they are miserable. Their goal was 500 grand. Another trader is up $100,000 on the year and is thrilled. Their goal was 50 grand. Same amount of money, different perspective. One is, quote, failing. The other is, quote, successful. But in fact, they've made the exact same amount of money. And so I would encourage you to redefine what success means to you, because adjusting your perspective can be a game changer. In other words, yes, we all have internal benchmarks that we set for ourselves in order to justify the time you spend learning how to trade, getting up early, sitting down here every day. You might think making $25,000 a year is just simply not worth it. And here's what I would caution against. Imagine in your first year, you sat down every single day, you even traded in a simulator, so you made for 6 months nothing in terms of real money. But then at the second half of the year, you start trading with real money, but you're trading with just 100 shares. You're making $15, $20 a day. So by the end of the year, you're up $8,000. It's probably not enough to justify a full year of time. You would have made more doing anything else. But what if you looked at this as this is setting my foundation? Because if I can make $20 a day with 100 shares, what if I increase my share size to 1,000 shares? All of a sudden, I'm making 200 a day. What if I increase my share size to 5,000 shares? Now I'm making $1,000 a day. That's $250,000 a year, right? So this is the scalability of trading. And it's not perfectly linear. There is some curve as you scale up, loss of efficiency, a little bit of slippage on your orders, things like that. But there's no question that if you're consistently making money with 100 shares, there's a lot of room to scale up your trading. And so it's easy for a trader to be dismissive of the fact that they're only making $25,000 a year or only making $50,000 a year, when in fact that trader is laying a foundation that they could build from. But they'd be much better set to build on that foundation if they looked at the success that they've already had with a degree of appreciation. You know, that they're looking at that $25,000 as an achievement, not as an embarrassment or as a failure. When you change your perspective, all of a sudden now you look at the success that you've had and you're grateful for it. And that gives you the sort of emotional strength and confidence to dig deeper, to keep trading, and to be, you know, even more committed to following your rules. Whereas a trader who feels like they're constantly, you know, a day late and a dollar short is going to start to trade from a place not of abundance, but of desperation and scarcity. So now they're grasping at straws. I really wanted to make 500K on the year. So now in this last, you know, couple weeks of the year, whatever the case may be, they start taking obscene levels of risk to try to get, you know, closer to that goal, because anything less than that goal is failure. Redefine what success means to you. Profits are a byproduct of a system. Is it possible for you to focus entirely on the process instead of the desired outcome? And so if we jump back here onto the whiteboard, step 1 is adopting a strategy. Step 2 is proving consistency in that strategy. And we're going to talk about some of the sub tips
for improving consistency here as we continue on into the class. There's no doubt about that. But number 3, focus on process, not profits. The problem with focusing on the profits is it becomes like a mirage. You're constantly chasing the profit and you sacrifice the focus on the process. It's just the same as saying next month I want to make $50,000, but without laying out what's the actual system and process that you're going to follow to achieve that result. So of course, yes, results are helpful. You want to have some benchmarks, but you can see in this conversation that we're having how these benchmarks, when set too aggressively, can actually be detrimental to your ability to grow as a trader. That's very interesting to me. And I've seen it in so many traders over the years. So one of the things that I want to encourage you to do right now is an honest assessment, both internally and externally. We're going to do this high level, but it's also something we're going to do every single day when we sit down to trade. So right now, your internal assessment is an assessment of the strategy that you're currently trading. So that's when you're looking at your actual profit loss ratio, you're looking at your accuracy, and you're asking yourself and looking at how much you've made and lost, and you're asking yourself, what here is working? So for me, and I'll just give you an example of a month here that I thought was kind of interesting. So this was, I'll just switch this here. So this was a while back, but I had this month where I underperformed my, well, you know, you could say my goal that I had set for myself. I was kind of frustrated. And so at the end of the month, I looked at my metrics and there were a couple things I wanted to look at. Number one, I wanted to look at my performance by price. And I noticed on this month that I was really underperforming on my trades on stocks above $10. But I was doing quite well between 2 and 5 or 2 and 10. And I also noticed that I was underperforming when I was trading earlier and underperforming when I was trading later. And so based on this data, I was able to make a pretty, concrete determination that for the next month, I should focus in on these hours here and stop trading early and stop trading later. And I should double down on trading in this price range. It's not only that I should stop doing this, it's that I should focus on this even more. And so the result was I made 100% more in the following month. I doubled my profit in the following month because I not only eliminated these unnecessary losses, but I was able to increase and extract more profit from the window where I was doing well. So an honest assessment allows you to understand your current strengths and weaknesses. So the internal assessment here, and we'll just jump back onto the whiteboard. So we're going to start with the internal. And the things that I'm curious about is your current strength and weakness when it comes to strategy. This is very specific to the strategy. So what are your current strengths? You should list them out. And what are your current weaknesses? And you should list them out. And are there insights here that you can draw that will tell you actionable steps that you could implement in the next 3 to 4 weeks? Based on my current weaknesses, I should, for instance, avoid, price XYZ, time XYZ, right? Or, it could be large caps, small caps, whatever the case is, but use your data to help you draw those determinations. They shouldn't be based just on opinion. It should be based on some concrete data. And then what are the strengths where areas that you could double down, right? And be more aggressive. So that's number one. And then number two, this is sort of in large part number one. And then number two is your aptitude. Now, I think with this here, what I'm thinking about when I say aptitude is that everyone comes to the table to trade in the market with a different set of skills and experience that you're bringing with you. And I think some people have skills and experiences that naturally lend themselves very well to the style of trading that I use, which is fast-moving, breaking news, momentum trading. But you may find that your aptitudes don't lend themselves as well to this strategy, in which case you've got two choices. You either try to build up your skill set so you can trade this strategy, or you say, I need to adapt this strategy to accommodate where I'm coming to the table, in terms of skills. So that has to be a decision that you make yourself based on whether you feel that you can learn the things you need to learn or you feel it's better to adapt the strategy. So the types of skills that I think are really critical here include computer skills, typing, fast fast response and reaction time, hand-eye coordination. This also requires a pretty high level of emotional awareness, situational awareness, an ability to identify. I know I'm getting really small on the writing here. An ability to identify when you're becoming emotionally hijacked, an ability to identify the emotions that other traders collectively are experiencing and how those emotions are being reflected in the actual charts of these stocks. You know, when you see a chart, for instance, of a stock that's done something, just unbelievable. I'll just show you an example here. So this stock, for instance, switch to like the hour chart. This one made this just insane move from about $60 a share here to 480. But the couple days earlier, it was down to like $15. So 10, 15 to 60 by itself was huge. And then it just exploded and went higher. There was a lot of emotion behind this move. There was fear, there was greed, there was exuberance. And there were traders that made a lot of money and there were traders who lost a lot of money. And so that's a stock that was exemplifying a lot of emotion in the market. When there's a lot of emotion in the market, there's also more opportunity because there's more volatility. So an ability to identify your own emotion on any given day and also the emotion in the market is really key. So these are some of the internal aptitudes. Now, you also have your budget, right? And your account size. So which is to say account size. How well funded are you? Number 4, your tech. What platform are you using? What broker are you using? What kind of trading tools? What's your internet speed? So these are all of your internal assessments. And there's probably more on here that we could list, but just to sort of summarize it high level. So you've got to do an internal assessment. And this is you as a trader today. How well equipped are you to compete in the market? And some of you are going to be very well equipped and you're still struggling. Others are not as well equipped and you may even be doing well for reasons that we're going to elaborate on as we continue through this class. So first you do your internal assessment, and then we do the external assessment. Okay, so what does the external assessment look like? So external assessment is where I'm looking at things that I have absolutely no control over, but certainly affect my ability to be a successful trader. And so the biggest one here is condition of the market, right? So we know that the market is cyclical, right? And we have hot cycles, we have cold cycles. And so what cycle are we in? If we're in a hot cycle, then there's an opportunity to extract a lot more profit from the heightened volatility. If we're in a colder cycle with more compressed ranges, there's not going to be as much volatility. There's not going to be as much opportunity to make money. And there's nothing we can do about that. It is 100% out of our control. And yet, if you came in every single day saying, I want to make $50,000 today or this week or this month or whatever you said, there's a big number. But the external factors that the market is not giving those opportunities, it doesn't matter how badly you want it, it's not going to happen. If you keep stretching for it, if you keep trying to get it, you're only going to end up losing and getting incredibly frustrated. So the condition of the market is the biggest external factor. Number 2 is, we have things like, intermittent, like tech issues. There could be data issues, a data outage. There could be a widespread internet outage. There could be a big storm and it's affecting data centers, things like that. There's nothing you could do about it. And the market could overall be strong, but we're having, some tech issue. And this is just the reality of, a very digital market, that these things will happen. And when they happen, you just sort of have to recognize, well, there's nothing I could do about it. Doesn't matter that I was hoping to have a great day today. I just got to hunker down and wait it out, right? There's a hurricane and everyone's on generators and there's lighter volatility in the market and volume. Number 3, I suppose certainly things like market market holidays. And number four, at least for small caps, small cap cycles. Although I suppose that ties in a bit with the condition of the overall market, more generally speaking. You could generally have a really strong market, but the small cap cycle's not aligned with that right now. So there could be a little bit of a divergence there. The small cap cycle is really specifically thinking about what's the theme that is giving us the biggest moves in the small cap market, because that's where most of retail traders end up focusing. I suppose to some degree, crypto it has some effect when the crypto markets are really strong. That seems to roll over into the stock market a bit. When they're really weak, that seems to pull down the market a little bit. So there's a few other external factors. So high level, you could be someone who's really well situated with all your internal sort of skills, aptitudes, and elements, but externally the market's really weak, and there's nothing you can do about it. This was actually the case, I would say, for me in a lot of ways during 2022 and 2023. I was in good shape internally, I felt, but we were in a bear market that the Federal Reserve essentially, created by increasing the interest rates to cool down inflation. So that reduced volume, it reduced volatility, and there was less opportunity. And there was nothing I could do about that. I just had to trade through it. Well, I suppose I say there's nothing that I could do about it, but in fact, that's not totally true. What I could control was how I responded to the external factors that I can't control. So I could respond by either accepting my lack of control and adjusting my strategy to accommodate the changes that are happening in the overall market, or I could choose to be stubborn and keep trading aggressively every single day in spite of all the writing on the wall telling me I shouldn't, and most likely the result is that I would lose money and I wouldn't do very well. So that is the extent that I have control. I have control over how I respond to these external factors. So while we should do this on a sort of on a grand scale in terms of my internal capacities as a trader and the external market limits right now, I also do it on more of a kind of micro scale each morning. So what does it look like each morning when I do this honest assessment? Internal, did I eat well? Did I sleep well? And do I have a couple stocks on watch that I like today for my strategy? That's internal, right? External, what's the condition of the overall market? Is the market, has it been giving really good opportunities over the last several days or several weeks? Are we in a hot market or are we in a cold market? And then based on that assessment of internal and external strengths and weaknesses on each day, I can adapt my risk tolerance. So the question is this really a day when I should be aggressive? You've got to be honest with yourself here. The truth will be revealed after the fact, but can we predict it now? In other words, what if you knew that today was going to be a red day? What would you do? If you knew with 100% certainty that today would be a red day, you would not trade. That's what any logical person would conclude. If it's going to be a red day, I will not trade. Fair enough. If it's going to be a green day, I'm going to be very aggressive. So the fact is, we really can't know ahead of time. But surely there is a point in the day where it becomes obvious that it will be a red day or it will be a green day. And now it's a question of how big of a green day it'll be or how big of a red day it'll be, right? And so that's where we really need to be paying attention. By doing the honest assessment each morning, we can sort of take the temperature of the market early on. Is the market hotter? Is it colder, right? Is this feel like the type of market where things are working well? And internally, am I in a good position to be trading today at peak performance? And if I am, then I should be really aggressive. Or if the market's not set up and not giving good opportunities, then I've got to be more conservative. So one of the techniques that I would encourage you guys to utilize, certainly we want to adopt a strategy, we want to prove consistency, we want to focus on a process. And one of the techniques that I really like using is is taking the temperature. So taking the temp of the market. And I guess I would say, let me just do number 4, honest assessment. And then number 5, taking the temp. This is a daily routine. I take the temperature of the market. And how do I do that? I do that with my first trade being a starter. And so for me right now, max position, I mean, it kind of depends on the dollar amount, but let's just say for right now, the price of the stock, but let's just say for right now, it's 50,000 shares. So 50,000 shares, max position. So on my starter, what I want to do is I want to trade with about a quarter or a fifth of that position. So I'll take a starter of 10,000 shares in my first trade. I find a $3 stock. My stop is $2.90, so I'm risking $1,000. My profit target is $3.20, right? 15 to 20 cents. It goes up to $3.15, so I end up taking the profit off the table, and I'm up $1,500. So now, on my first trade, I've broken the ice with a starter. I've built a little bit of a cushion on the day. Now, had I gone red, I'd be down $1,000. A loss that, while disappointing, is very tolerable. And would I increase my share size on trade number 2? And the answer is no. I don't increase my share size until I have first crossed over about $1,000 of profit. Now, my daily goal right now is $5,000 in a cold market and $20,000 in a hot market. So in a cold market, the daily goal is, a fifth of that or a quarter, that's about $1,000, $1,500. In a hotter market, the first cushion is $5,000 before I'm going to step up and be more aggressive. So this technique here of using smaller size of about 1/4 to 1/5 of full position on my first few trades allows me, if I go red on the first trade, to recognize, being red on the first trade is a precursor for potentially having a red day. So now I need to take my foot off the gas and stay with small size until I have recovered that loss and potentially gone green. If I don't recover the loss and on trade 2, I'm also red another 1,000, and then on trade 3, I'm also red, then I can say at that point, I've had 3 losses in a row, 3 strikes, you're out. That's baseball, right? So it works in baseball, it works in trading. So then I say I'm done, and I'm down $3,000. Now my daily goal in a cold market is $5,000. So being down $3,000 is not even losing more than I make in one good day. The $20,000 hot market goal, now certainly in a hot market, I might be a little more aggressive, so maybe I'll be down more like 5,000 on these first 3 trades, but nonetheless, it's still not more than I would make in a really good day. So this has been the best technique that I have discovered for being able to determine whether today will be a red day or a green day, and to make that determination with smaller share size. The best green days, I'm green on the first trade and I just keep adding profit. That's the best. The worst red days, I go red on my first trade and I just keep having losses. So that first trade for me makes a big difference. Now, I'm not a high frequency trading algorithm. I'm not taking 1,000 trades a day. I'm taking a small number of trades each day. Even on my best days, I might only take 15 or 20 trades. So it doesn't really, so in other words, that first trade really does matter. With an algorithm that's taking 1,000 trades a day, the first trade doesn't matter. But for me, that first trade really matters. So I trade with smaller size, I break the ice, and now I can get a really good sense of whether or not, man, this is annoying, this keeps happening. So let me see, what software am I running that's making this shut down? I'm catching it quickly, but it's my screen right there keeps disconnecting. Okay. What was the last thing I said there? This is the best system I've come up with. I think I'm gonna have to just stop this and grab the recording. It's okay. So in today's episode, now I can get a really good sense of whether or not the nation with smaller shares. The best green days, I'm green on the first trade, and just keep adding stock. Okay. Keep having loss. So that first trade for me makes it Now I can get a really good sense of whether or not.
Okay.
Now I can get a really good sense of whether or not today is going to be a red day or a green day. And so I want to remind you that you do not need to trade every day. A lot of traders overcomplicate this. You don't need to trade every day. You don't need to trade every stock that's moving. Your goal here is to have the highest accuracy possible. High accuracy breeds self-confidence. And when you have higher levels of confidence, you trade with a bigger share size, and that creates a positive feedback loop where you start making more money. So you don't need to trade every single day. In fact, you should not trade unless there's a setup that you like. And this all comes back to that sort of initial concept here of adopting a strategy, proving consistency, focusing on being a master of one strategy. Be a master of one. That's what it's all about. So adopt the strategy, prove the consistency, focus on the process, not the profits, the honest assessment, and take the temperature of the market every single day. So if you take that approach, you're going to realize that it's better to wait it out than to trade a low quality setup. You trade a low quality setup, you're going to get inconsistent results. It's going to draw down your accuracy. You're going to get frustrated. Trade less and walk away sooner when it's not happening. This is really hard for a lot of traders to do. It's really hard for traders to walk away at the right time. In fact, there's a book here, right here, knock something off my desk. This book is by Annie Duke. It's called Quit: The Power of Knowing When to Walk Away. I couldn't imagine a better book title for active traders. This is really a fantastic book. I've listened to it on audiobook. I have the physical copy, and I only got it so I can show you guys the physical copy when I do these episodes. But it's really a terrific book. And it's not about trading, but it just speaks so much to the experience that traders have. Because I will say that the one thing that you could do that would really improve your trading over the next 4 to 6 weeks is if you can learn to walk away at the right time each day. That's it. That is it. Walking away at the right time. Think about it. Every day you're doing one of two things. You're either leaving money on the table because you walked away too soon, or you're giving back profit because you stayed too long. How do you find that sweet spot? So I'm going to jump back on the whiteboard. So number 6, walk away. I'm going to say sooner. Learn to walk away sooner. And so the way I approach this is that given that every day I'm doing one of two things, either I'm giving back profit or I'm leaving money on the table, what I would like to do is I would like to, as a beginner, encourage you to sit down and focus on trading until, and shouldn't even be a dip. This is just like trade 1, trade 2, trade 3. Trade until your first loss. And at the first loss right there, walk away. If you right now are a beginner trader and you don't yet have a track record of 6 weeks in a row of profitability, then you need to be so disciplined about taking the profit when you have it and not overstaying your welcome. That can mean just doing one trade a day. Just one trade a day. Now, in my recent episode that I just taught, and I'll put a link to this at the end of today's class as well, I broke down how to start trading in 9 steps. And I shared with you guys a trading plan that I encourage all beginner traders to utilize. It includes phase 1 of taking one trade a day. That's it. Get in, get green, get out. For the sake of continuing to gain experience, you trade the rest of the day in the simulator. Or you may even trade the beginning of the day in the simulator until you see that one really good opportunity. You take that with real money, and then the rest of the day is back in the simulator. The advantage of doing one trade a day is that it's very black and white. It's one trade. There's no breaking the rules, just one trade. And if it's green, great. And if it's red, bummer. Now, over the course of 10 days, that'd be 2 weeks. If you're red 70% of the time, that speaks to accuracy being poor, and you need to work on improving your accuracy. But if you're green 70 or 80% of the time, then I would say, holy smokes, we've got something right now that's working. So, and you're making money, right? So now what it's time to do is begin increasing your share size. Don't increase the number of trades. Increase the share size. You start with 100 shares, then you go to 200, 300, 400, you just keep increasing a little bit each week. And the next thing you know, over the course of 8 weeks, 12 weeks, 16 weeks, you're now getting into 4, 5, 6 months of trading. You're still doing one trade a day, but you've worked your way up to 1,000 shares, 2,000 shares. 2,000 shares, 15 cents, $300. You're talking about $75,000 a year. And again, setting the bar low. Now you're thrilled. You're like, wow, I'm setting the foundation. I'm taking one trade a day. I'm getting in, I'm getting green, I'm getting out. I'm not overstaying my welcome. Now, when you've got a track record with that kind of when you've got that kind of track record, it's going to build confidence in yourself. And so now you're going to start taking bigger size, and you're also going to start feeling comfortable taking more trades. And that's where we get into this concept, which is trade until your first loss. And once you have your first loss, then at that point, you walk away. So beginner trader, phase 1. So phase 1 is 1 trade per day. Phase 2 is 1 trade per day, but with bigger size. Phase 3 is increasing to multiple trades per day and continuing with bigger size. Phase 4 is scaling in. Phase 5 is scaling out. These are the 5 phases that I teach for Warrior Pro members in our classes. This is the way I would approach it. And so I would encourage you, if there was one thing that I would focus on over the next 4 to 6 weeks, it's walking away sooner. And I don't want to be dismissive of what I've already shared with you, because the fact is that requires an honest assessment. Walking away sooner means requiring an honest assessment of how strong is the market today? Should I continue to be aggressive? Is this a hot market? Is the window open for opportunity to capitalize on the volatility? Or has the window closed and I have to walk away? So what I find in my trading that I typically do is I don't want to walk away while I'm still making money. So I walk away after I've given back a little bit off the top. But you know what's really important? It's very important that on the days when the market is hot, that you get to the point, and this isn't going to be when you're still taking 1 trade a day and you're a beginner and you're just trying to build proof of concept, but once you've been trading for a little bit of time, you want to get to the point where you're more aggressive on the best trades and on the best days. And this is tough, because this requires that very strong connection to the strength of the market, that very honest assessment of how strong is the market external and how strong am I internally, right? If you've just gotten off a red-eye flight, an overnight flight from, 8 hours, whatever, you're not at 100%. You didn't eat well, you didn't sleep well. Doesn't matter that there's a couple stocks that you like. You're not going to be in a place to trade well. So to be able to really capitalize on this type of these trends in the market, what I'm doing is I try to keep my environment pretty consistent. So I sitting down each morning, same time, etc. And what I'm doing is I try to be really aggressive when it's hot and then cool off, and then really aggressive and then cool off. So I have the cool off periods where I give back a little bit of profit, but how much I give back is limited. Because that's the thing, I only want to give back so much, right? So that means being super, super aggressive when it's hot, and then trading a lot less when it's cold. And then really aggressive, and then back to, foot off the gas. And it feels like trading is a marathon. And so on these little periods here, like these are the moments in the marathon where I can really gain some ground. And these are the moments in the marathon where it's raining or it's muddy, it's slippery, and I'm just trying to stay alive. I'm just trying to keep my head above water. And if I can just keep my head above water, I know I'll get to the other side of this where I can put pedal to the metal again and get aggressive. And that's where I'm going to make up, some ground. So trading is definitely about leaning in when it's hot and taking your foot off the gas when it's cold. But when you begin to trade your A quality setups, and you've got that strong track record, that's where you're going to have the higher levels of self-confidence, higher levels of accuracy, and then you're going to start being on that positive feedback loop where you're taking bigger size and being more aggressive. So consistency, confidence, increases profitability with a higher accuracy, high profit loss ratio. This is just the positive feedback loop that I want to see you on. It all begins right here with accuracy. So if we were going to go back for a beginner trader right here, adopt a strategy, prove consistency, focus on high accuracy. So if you're struggling right now with accuracy, I have 2 things that I'll share. Number one, accuracy improves with experience. It doesn't matter what you're learning to do. If you're learning to kick a soccer ball, if you're learning to play basketball, shoot free throws, whatever, the more you practice, the better you will get. So if you're new, it's to be expected that you're not going to be you're not going to be performing at the level of someone who's been doing it for a decade or whatever the case is. You've got to build experience, you've got to practice in order to get better. So that's number one. Number two, for those of you guys that are Warrior Pro members or who have been learning the strategy that I trade every single day, what I set out for you guys is a roadmap. I give you a very specific set of criteria, the type of stocks that I'm willing to trade. Those are the 5 pillars of stock selection. And then the very specific entries that I'm willing to buy on, right? Those very specific chart patterns. So by focusing on trading within the rules, basically what I'm giving you is a roadmap. I'm giving you the roadmap to follow. It's your journey to take that roadmap and to follow it. And you have to bring discipline to the table. And you've got to bring dedication and drive to the table. You've got to be motivated. But I really think that if you come to the table with low expectations, you come to the table focusing on the process and understanding that profits are a byproduct, then what you're doing is you're setting yourself up to succeed. And sadly, what a lot of traders end up doing is they set themselves up to fail because they come in and they're saying, I want to make $20,000 this month. And I say, guys, you're doing this all wrong. You've got to focus on the process. The profits are secondary. But people come in focusing on profit, 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 and they end up getting themselves into what ultimately is a negative feedback loop. So what does the negative feedback loop look like? The negative feedback loop is when you come in on day one, or your first week, your first month, and you lose money. And then because you're angry and frustrated, you don't want to feel this way anymore. The quickest way to not feel angry and frustrated would be to make back what you lost. So you're encouraging yourself to take more trades. And yet you still don't have a strategy. So what ends up happening is you end up losing even more. And now and you see what's happening. So even if this has already happened to you, we can cut this negative feedback loop right now by focusing on percentage. Focus on high accuracy. Don't focus on profit. Focus on maintaining as high of accuracy as you can. Higher accuracy means you're trading better quality stocks, which means your profit loss ratio is going to improve. That's going to improve your consistency. That's going to give you more confidence to be more aggressive. And this is the beginning of the positive feedback loop. So accuracy right here is what you have to focus on. And if you're trading and you follow everything that I'm sharing with you, and for the next month your accuracy is still 30% or 40%, all that says to me is that you need to get better and you need to gain more experience at understanding the type of stocks have the potential to make a big move. You've got to sort of orient yourself with those 5 pillars of stock selection and look at your patterns that you're trading. And all of that data can be revealed to you when you export your trading history, because then you can see exactly what you're doing right and what you're doing wrong, especially when you have a trader like myself that puts everything on the table so you can kind of compare what is the difference between the way we're implementing the strategy if we're trading the same strategy. The goal here is to trade without being influenced by emotion. This is far easier said than done. But emotions are generally the result of experiencing big gains and big losses, or the feeling that you missed an opportunity. So it all ties back to seeking to make as much as possible and not being satisfied with hitting your base hits. Now, I shared an example of this not that long ago where I had a day where I don't even remember the details of how much I was up on the day, but let's just say I was up $100,000 on the day and I gave back 70% of it. So I was up, quote, only $30,000 on the day. And it was very easy in that moment to feel disappointment and to feel shame and frustration. And while there were some good reason to feel frustrated myself that I didn't follow my rules of walking away when I'd given back only a little bit, right? So it's okay to be frustrated about that. If I kept trading, that would have been me seeking to no longer feel bad about losing that amount of money. And suddenly I've lost perspective of the fact that, you know what? Life is good. I've still got more in my pocket than I had a few hours ago. So if your daily goal is $40 and you make 40 and you don't walk away and then you give it back and you're up only $12, it's easy to say, this is nothing. I'm going to keep trading. And in that moment, when you're no longer grateful for what you have, it's very easy to sacrifice it and let it go. Small base hit days are so important. That is how I've built my career. It is small base hit days. So this is over $20 million of profit right here. Well, that was the close view. We'll back this up. So $20 million of profit here over the last 10 years, 21 million. And it's not from hitting home runs. It's not to say there haven't been a few big winners here and there. There have been a few big winners and there have been a few big losers. But if we just look year to date here, winning, and then we look at year to date, and then we look at losing, and we look at year to date, I want you to look at the size of my average winners in cents per share and the size of my average losers. Average winners are 18 cents. Average losers are 15 cents. And this is $6.5 million of profit. So you do not need to trade every single day. You only should trade setups that you really have very high conviction in and you really believe will work. So this year, sitting right now, just under, let's see, no, we got to go back to year to date. So year to date here, sitting just under 72% accuracy, 71% accuracy. And I think that's really solid. There are certainly traders out there who traded a lot more than me and may have even made less. So it's not about trading everything that moves. Now, this also means one of the things that's really important is to get to know your triggers. So number 7, know your triggers. This means you begin to develop an awareness of the things that can happen in the market that cause you to become emotionally compromised or emotionally hijacked. So giving back half your profit or giving back all your profit, going from green to red. Going from green on the day to red is definitely a trigger for a lot of people. But going from green to giving back half or having missed a really big opportunity. The more you journal while you're trading, the better you'll get at recognizing, oh, this was the thing that happened just before I started to spiral. So unfortunately, all traders are going to have moments where you spiral and you end up having back-to-back losses and it just gets bigger and bigger and bigger. And then you realize, okay, I've got to, take my foot off the gas here. And it's in hindsight that you realize I should have walked away sooner. And so by journaling while you're trading, you begin to collect data about your emotional state of mind as you're going through the trading day. And then when you look back at that, you realize, okay, this is the moment where I wrote, I'm really frustrated. The second I wrote that, that has to be my cue to get up and walk away from the computer before I keep trading. Because when I trade from a point of being frustrated and angry, I don't make more money. I lose what I've already got. And so if I was to boil this all down into the simplest suggestions of what you can do to improve your trading over the next 4 weeks, I would say, number 1, all of this ties in to being a more disciplined trader, to bring discipline into your trading. If you've already got a strategy, you're good. If not, you need to adopt a strategy that's proven profitable by other people. You need to practice trading in a simulator. You focus on the process, not the profit. You do honest assessments at the beginning of your trading, and then certainly each day. You take the temperature with small size, you walk away sooner, and you know your triggers. If you could do all of this, you're going to put yourself in a position where you're taking small base hits, you're getting in, you're getting green, and you're getting out, and you're not overstaying your welcome. This all comes down to discipline. It takes a lot of discipline to be able to follow all of these steps. But that's what it takes. Now, for me, the small account growth strategy, it's a type of trading that's very fast. It's very quick. It's risk and reward like anything else. I take the risk, and when these setups work, they work really well and they work really quickly. And so for me, it's pretty much instant resolution. It's like breakout or bailout. I get into these trades, and when we've got a stock that's got breaking news between 7 a.m. and 10 a.m., and it's the leading gainer in the entire market, these things work really well. It's my job just to be patient and to wait for these opportunities to come. To be able to do that honest assessment of, is this the market where I'm going to see those types of gains? We've had periods in the last year where I come in each day and I'm very, very confident, 90% conviction that I'll be up more than $50,000 on the day. So I'm already coming in tuned to be aggressive. And then there's other days where I'm like, I expect to make nothing today. And I'll be pleasantly surprised, but everything is just tuned down. And one of the things that I do is I actually will take money out of my account when things start to cool off. So I don't even have the ability to be aggressive, even if in the moment I thought I could, because the fact is when it gets cold, it takes a while for it to heat back up, and there's just no sense in being super aggressive when it's cold. So I limit my ability to do that, and I think that's really key to my long-term success. When it's hot, those first few weeks of a hot market, I build profit very quickly. Then I can keep adding to that profit with the gains I've already made because I can take bigger positions. And then once I have a couple losses and it starts, for those of you guys that are tuning in on YouTube, I'm going to put a link to this